The MGM Grand case is the case that we use in the first year accounting course to introduce students to the topic of accounts receivable, issues around companies trying to collect payment from their customers and how to account for that in the financial statements. And the company has estimated the extent to which it doesn't think it's going to collect some payment from some of its customers, and we're asking the students to evaluate those estimates. And it's a really nice way for them to start to be exposed to the notion that there's judgment and estimates in the financial statements rather than things being really cut and dried and exact according to a rule.
I'm originally from New York and went to college in Manhattan and was working in Manhattan for about 5 years for a data and analytics company. When I visited Darden as a prospective student, I sat in on a class, and that's when I really realized that Darden was where I wanted to pursue my MBA. I thought the class was very engaging and interesting, and that was the finance class where the material can be a little bit more technical in nature, but the class was very interesting and really enjoyed it. What I'm hoping to get from today's learning team is kind of a better understanding of the material that we'll be covering in class tomorrow, and we'll be reviewing MGM Mirage, which is one of the world's largest gaming companies.
They do a great job here of matching up with people who have different backgrounds, so that really works to enrich the conversation. So we've got folks from all over. I've got sort of a finance background, so any of the cases that are accounting or finance oriented, hopefully I'm bringing some good perspective there.
So I don't come from an incredibly quantitatively heavy background, so learning team's been really helpful for me, particularly when building something like a spreadsheet model. I can't always get from point A to point E on my own, but I can bring what I've done to learning team, and we can kind of get there along the way.
My learning team has helped me better understand how to set up some of the journal entries and T accounts with respect to allowances and collections for accounts receivables, but I'm still looking to class to kind of get a bit more practice with it and also reconcile information from the balance sheet and income statement and kind of how it all fits in together.
How many of you have been to a casino? Oh my gosh.
The day before, we had talked about how to estimate bad debt expense and why we're doing it on a matching principle. And today, what we were talking about is how to use the figures of accounts receivable and estimated bad debt expense that we get in a financial statement, and then back into the information that we would have put in there from the day before, the actual things that actually go on behind the scenes, write-offs, recovery, collections.
Let's take a look at the financial statements for MGM. Monica, can you help us understand what numbers are relevant to us here?
Sure. So here, towards the bottom of the exhibit, we'll have the casino accounts receivable, so what they expect. I think knowing there's a chance that I'll be cold called in class really motivates me to prepare well for class. I'll be in class with the same 60 students for 4 terms, so I want to stay engaged, participate, and really learn. While it can be intimidating at times, I think that it's a very important aspect to the case method and Darden overall, and really helps prepare us for the real world.
So I'm confused. A negative expense. Am I the only one that's confused? Lee, are you confused?
I was before the CPA on my learning team explained it to me last night. I still might be, but...
Probably, if the CPA explained it. Yeah. You know, I oftentimes find it's the student that doesn't have the background in accounting that asks the most powerful questions in the classroom. And if I can find that student and get that question out of that student, that generally starts a very powerful conversation in the classroom. I'll look for students to respond to that question. I'll look for their enthusiasm at responding to that question that they signal with a raise of their hand. I'll go to someone who wants to help out with that question, and that oftentimes results in a conversation in the classroom where you can just see the learning build and build and build. And then the more people we can involve in that particular conversation about that particular issue, the greater the learning becomes.
Katie. All right, so I am way out of my comfort zone on this one, but is there, like, what if they sold their debt partway through the year?
No. Henry?
That would just, I mean, you're just selling them for cash, so it would decrease your accounts receivable, and you would get, basically you're selling the accounts receivable.
One of the things that I really take advantage of is being able to ask other individuals in the class how things are done. So we had someone in the class who had actually done auditing, had audited a casino. So to be able to hear what he had to say about markers, another individual who had worked in retail and could talk about accounts receivable. So I learned the technical side, but also to be able to hear other people's experience was all new for me.
She's saying, can we just sell some of these that we don't want to deal with anymore, right? And what do we know about when we sell an asset? What do we do, Katie?
We sell it and get cash.
Yep, we sell the asset and we get cash. So we take the asset off the books, we increase our cash, and what do we do for the difference?
We have to either report a gain or a loss.
Yep, record a gain or a loss for the difference. And so that's Henry's example. $100 of receivable you sell for 90. So your cash goes up by 90, receivables down by 100, and you record a loss for 10. So here we are trying to hypothesize what might be causing this. As a user of the financial statements, do we care why this is next? Jennifer.
I would say we care because if it is the cookie jar reason, we'd absolutely care because that's cooking the books and they're trying to, pump up their net income and therefore pump up their earnings per share. If it's right, analysts are watching that, and so I think you would definitely care.
Kenny?
We talk about this cookie jar reserve very negatively, but in reality, they're very transparent about it, and so are the banks, for that matter. I think we're a little too negative on it. I would hope that casinos and banks would have higher allowances when the economy's bad, and I'd rather them overestimate than underestimate, and I think that's what we're seeing here in 2001, 2002. And what we saw with the banks in 2008 to 2010. But analysts see this and they know, so it's not like they're trying to fool anybody.
I understand your logic, but to an extent, if they were to overestimate as a matter of practice, then what you could do is get into a situation where if you're going to have a great year, bump yourself up. You could overestimate what you're not going to be able to collect on, write yourself down to a lower tax rate per chance. And then if you're going to have a bad year, okay, now let me...
So coming into Darden, I had no accounting background whatsoever. I was more coming from a policy standpoint. So I think I'm always learning so much from my classmates who are coming from an accounting background, who have CPAs. So today I took away a lot of information about kind of this cookie jar concept, that sometimes firms can inflate or overestimate a certain amount of money that's going to be uncollectible to kind of distort their books one way or the other. So there was a really interesting discussion that happened between overestimating or underestimating and kind of whether that can be done with the best of intentions or the worst of intentions. So it was kind of great to hear the back and forth between Tony and Kenny today in class.
The CFA on my team told us though that this is one of the areas that commonly come up as a negotiation point between auditors and companies.
At the end of class, if we've had a class where many students contribute to the conversation, we've had 1 or 2 or 3 students that have been willing to get out there, put it on the line, and struggle publicly in front of 65 of their peers by sharing their most intimate intellectual thinking and putting it on the line for other people to criticize it and to help build it up. If we've had a class like that and we can work together to understand the content and come to closure where everybody's understanding of the content is enhanced, then I go home at the end of the day thinking that we've really done our job.
So today's class helped me confirm that the approach we used in Learning Team for calculating sales on account, write-offs, collections, and accounts receivable was accurate. And towards the end of class, we looked at the bigger picture, which really helped put all of the numbers into perspective for me. And then we also considered questions that would be important for an investor to ask the CEO or CFO of a company about the business, really to get more detail and insight into the numbers reported within the company's annual report.
When I came in here, accounting was one of the first, I think it was our third class on the first day. And I came in expecting the worst. It's accounting is dry. I had a tendency to sleep through my drier class in high school and college. And Luann came in and just blew us away. And there wasn't a moment where I wasn't just fully engrossed and fully engaged. And that's held true now we're in term 3. And there hasn't been an accounting class that I haven't been excited to go to. I think that's kind of unbelievable when you have people that, and this, I know it's not just me, I mean, it's everybody in my session that just gets up every day and is ready to discuss, be it finance, be it accounting, be it econ, and they're excited to be there. And that permeates the whole discussion, and it really fundamentally changes the classroom dynamic when you have everyone there is 100% engaged, they really want to be there, and they really want to contribute.
So here at Darden, we discuss about 500 cases in 2 years, and I think that gives students a lot of opportunity to understand core aspects of business from different lenses and really see how different parts of an organization fit together. And I think this allows students to also, post-Darden, join any organization or profession and be a leader.
All right, we're done. We'll start with inventory tomorrow. Good work.